Hey everyone, this is John live from Italy. We want to take a look here at the markets this weekend and really just see what is shaping up, what is in store for the weeks to come with the new reality of a Trump presidency. And the main thing here is that was not what the market was expecting. And so we want to look at it from the perspective of what are the biggest moves here now. And so the biggest things I've been looking at is one, strength in the dollar. So if the dollar is going up, FXE, which represents the euro, is going to go down. I'm actually looking for this to go retest its lows here. That's the 52-week low down there at 103.36. If we change this around and we look at the dollar index, you can see the strength that is coming down the pipeline. All of this is reaffirming the fact from a Trump presidency, the spending in infrastructure and the stimulus that's coming down the pipeline, because essentially if he can do $1 trillion in infrastructure, that's kind of that's almost another way to, you could almost call it QE. It's a way to just stimulate. That's going to have a profound effect on, a more direct effect on the economy. That boosts the dollar. That implies that interest rates need to be raised in December and completely changes the ball games. So stocks that would benefit from that, obviously more infrastructure related stocks like a Caterpillar, like a U.S. Steel, and just kind of the basic more meat and potatoes kind of industries like that. But also keep in mind here, what's interesting is that what can benefit from this is also copper. And for copper is kind of like the economic doctor of the world. And if copper is essentially over $3, it means that there is a world demand. The average house takes 400 pounds of copper. The average car takes 50 pounds of copper. When there's demand, when there's stimulus, things are being built and copper prices go up. And you can see that copper prices have exploded here with the implication that this is something that is coming down the pipeline. Okay, so from there, it gets really interesting. And we have something like gold would continue to be under pressure. Okay. There's been a lot of people rushing into gold for safety, and I think they are going to get annihilated. I think gold could get hurt really, really bad. Now, does that mean I'm going to go out and sell my physical gold? No. That's something that you can hedge, which is great. But in that kind of environment, gold goes down. Okay, so just kind of be careful with that. And then from there, the next thing that happens is bonds go down. You can see TLT here taking it on the chin. We're getting close to 52-week lows in TLT, and if that breaks that and continues to go, I mean, essentially that almost guarantees a rate increase for December. All right, and so we want to get prepared for that. Other than that, keep an eye on the financials. You're going to see all the financials in this kind of environment doing well, whether it's JP Morgan, Bank of America, Berkshire Hathaway. Essentially at this point, money is pouring into these. It's getting reallocated out of tech and into these, and just be careful with the Amazons and Googles of the world at this point. Okay, a lot to cover in the premium video. You guys have a good night, and we'll see you at the next update.